Hi, I'm Kevin Castaneda, and this is Kev's Mindset, where we talk everything finance, investing, mindset, and productivity. And today we're going to be talking about why the market is crashing and why this crash doesn't seem to stop. We're seeing stocks like Enphase, Tesla, Lucid, Peloton, Coinbase, and many more stocks just keep coming down, EXPI, and many more. And a lot of us are wondering, why is this stock crash is continuing, and it seems like it's never going to end. So we're going to be talking about the things that are going on and the things that are going to happen in the short term that might start fluctuating stock prices. So let's get right into that right now. Leave a like if you do enjoy, and subscribe if you are new, and let's hop into the video. So there's several things going on right now. However, I'm going to be talking about the most prominent ones that are really affecting the stock market. So let's start with number one. So number one is inflation. Now, some people think inflation is not going to come at all. However, we're already seeing it, especially in our material goods. However, it can be argued that with shortages and supply chains being messed up in 2020, that amid this shortage of a lot of things, prices are going up, so it might not be due to inflation. However, we do believe that because of all the money that was printed in 2020 and in 2021, there is definitely going to be inflation. And on May 12th, we're going to see this new CPI data that will show us a kind of overall picture of how we're doing with inflation. And so inflation is really moving stocks down. Inflation is really moving stocks down. And so it's something to pay attention to as we're seeing inflation rise higher and higher and higher as months go by. And we're going to get to a certain level where it's like, are we going to stay here? And I'm going to tell you my personal thesis. My personal thesis is that inflation we'll see inflation, okay? But it will not persist over 6 months. That's my personal opinion. I think we will see some inflation, but over time, it'll just come back down to normal levels and it'll start trickling back down. I think we won't go higher than 4% in my opinion. I think 4% it would blow my mind if we went over 4% inflation. And so I think we're going to be okay. So honestly, inflation, I feel like the market's kind of overly terrified of inflation at the moment. I feel like inflation is an important thing. However, I feel like it's getting blown out of proportion. Okay. It's getting blown out of proportion. It's getting blown out of proportion. And this is causing the market to sell off before it even happens, before we even see all this inflation. And so that's one of the things that we really need to pay attention to. Is the market overestimating what's going to happen? And I think it is. I think inflation is not going to be some ridiculously crazy high number. And so I think the market sell off for high PE and tech stocks, and mostly it's just high PE and tech stocks and Coinbase in that bunch as well. I think the sell off is kind of before it should be. I think we don't need the sell off right now. I think if inflation does come, then later on we can, they can come down. But I feel like the sell-off is coming before, and so I feel like buying around this time is not too bad. And so let's move on to the second catalyst that's pushing us towards the downside. So the second downside catalyst is that a lot of people are talking. Let me explain. So Biden is proposed, and it doesn't matter if you're Republican, Democrat, Independent, environmentalist, I don't care, okay? It has nothing to do with politics. However, Biden is proposing to raise taxes for capital gains, and this is an important thing to keep in mind, because raising capital gains taxes, it's only for people who make over $1 million. So maybe for us, the retail investors, of course, we're not going to be impacted directly. However, indirectly, we will be affected, because what's going to happen is people are going to sell like they already are before this new capital gains comes into effect, and then they can take these capital gains, whether they're long-term or short-term. Either way, they're going to get a better rate now than they would after this comes out. The new capital gains tax for people who make over $1 million is ridiculous. It makes no sense. So why wouldn't they sell now, or they know that they're going to get this, instead of selling it later on into the uncertainty of what it may be? And so this is something we really need to keep in mind, because uncertainty is what drives markets down. When people don't know what's going to happen, markets tend to come down. And so when this fear, uncertainty, and doubt go away, when the FUD goes away, we're going to be okay. So the main thing you need to keep in mind is that if you're a normal retail investor, buy in when there's FUD, when there's all this fear, uncertainty, and doubt. When this is all going on is when you get really good deals on the stocks that you love, especially if you're into tech and high growth stocks. which there's also other stocks that are selling off as well. It's not just tech and high growth, but those are the ones that are selling off the most. And so if you do like any of these stocks like Tesla, Coinbase, what else, Square, EXPI, there's many more companies, that are selling off. SPACs as well are selling off quite substantially. And even cannabis, Tilray is down like 10% at the time of this recording, which is May 6th. And so you really need to take into account, hey, are things overblown? Are they getting sold off too much because people are talking about it? You need to keep that in mind, and you need to see, hey, should I buy now that everything's in dip, when there's all this FUD? Or instead of waiting and then buying when everything's recovered, because then you're not getting a deal anymore. Then you're buying once it's already up. So you might as well get these dips and just keep buying the dips. And eventually you're going to look back and be like, dang, I did a good job there. And that's what you want to do. Okay, now we're going to go to the third and final downside catalyst. Let's go. The third and final downside catalyst is human psychology. So the problem is that a lot of people are seeing, hey, stocks are coming down, I think it's time to sell off. And it's not even retail investors, even though it's kind of an overall shift that's going on. And it's a lot of all this fear that's going on. A lot of people are like, the human psychology is when you see something's doing bad, you go towards the thing that's doing good because you expect that you're going to do well. And that's kind of not what you want to do. You want to buy the dips and the thing that's doing bad so that over the long term, you're going to do better off. But especially retail investors or newer investors also, they're moving over towards crypto because crypto is doing really good. So they're like pouring all their money into Dogecoin, pouring all their money into Ethereum, Bitcoin, and other altcoins as well. And this is making them higher returns, so they're staying there instead of coming back to the stock market. That's why if you haven't watched my video about Coinbase and why it's going down while all crypto is going up, that was kind of what I explained. How a lot of retail investors are leaving normal stocks and they're going to crypto because crypto seems to be making a lot more right now. They want quick and they just want quick, fat, like easy returns. And so they're going to crypto, whether they understand it, whether they don't care, they're just going to crypto. And on top of retail investors leaving, which it's not all retail investors because some people are hodling and they're kind of just holding the bag. So it doesn't count them. However, there's on top of some retail investors leaving towards crypto, there's hedge funds pulling money out of the market. And then on top of that, adding selling pressure by shorting the stocks, and especially all these high growth, big tech and SPAC, all these companies, they're getting just shorted. They're getting shorted substantially. And this is really driving down the prices, as well as if you're a hedge fund and your client called you, they're like, hey, heard someone just got injured on Peloton. And then you're like, oh, and you have to sell so that you keep your client as a hedge fund manager. And so when you sell in order to keep your client, then you add selling pressure by selling stock. And then on top of that, you're like, hey, let's short it. And then you short it. So you're taking buyers out. So there's less buyers now. And on top of that, you're selling. And on top of that, you're shorting. So you're really adding a lot of downward pressure onto the stock. And that's what's going on too. The human psychology is saying either let's move towards crypto or let's sell and short. And that's what's happening in these high tech and high growth stocks. And a lot of people think this is not sustainable. And that's kind of the bottom line. A lot of people think it's not sustainable, the amount of growth that we've had. Even with Apple, they had like 44% beat on, I think it was revenue. Sorry if I got that wrong. But they had a 44% beat on, I think it was revenue. And even after they beat earnings, they still went down after they went down after the next day and after hours that day. And so that's kind of something we need to take into account. Stocks are going down even though they keep slamming earnings. It makes no sense, along with EXPI and all these companies, Peloton, they're all destroying earnings, Etsy, and they're just getting slammed. And so we really need to take into account that keep in mind, it's probably not your stock picks. It's just the fact that a lot of people are scared. And on top of that, everyone thinks that the market's not going to sustain these gains that we've had. So keep that in mind, and remember, maybe rewatch this video if you need to. It's not your fault. It's not your stock picks. Everything's pretty much down, except for if you're buying the S&P 500 or the Dow. And in that case, you're probably fine. But if you're a single stock investor and you're not a mutual fund investor and you don't invest in AT&T or something like that, then you're probably feeling some pain. So don't worry about it. Keep buying those dips and you're going to be okay. Anyways, that's it for this video. Thank you so much for watching, and leave a like if you did enjoy, and subscribe if you are new. I make more content like this every single day, so if you do want more, you can find some here, and just keep watching. All right, guys, don't worry about your stocks. It's going to be all right. Keep buying those dips. You don't want to look back in a couple months and be like, I wish I bought that dip. Buy the dip now, and you won't regret it. Okay, I'll see you guys. Thank you. And this was Kev's Mindset. And don't forget to get up to $50 of any stock of your choice with the link down below with Public. And if you're part of the people who are moving into crypto, I have the link for Coinbase down below as well. We get $10 when you deposit your first $100. And just for clicking the link down below. Thank you so much. And I'll see you in the next one. This was Kev's Mindset. And I'll see you.